Hello there and welcome to professional trading. Before we go into the video for today, I'm going to show you guys something real quick. Now, for those of us that have been wanting to contact me, like I said, you can actually go to the about section, and then you can use the WhatsApp or Gmail. And now you want to open a derivative account. Now for those that want to open a real derivative account but having difficulties and all that, now I have links in some of my videos, but I advise you come click this real quick, and then you shouldn't be having any issues, and you should contact me if you have anything of that sort. So I think that's about it on this page. So let's dive straight into the video for what we have today. Alright, so as you can see right in front of me now, we're going to be talking about the range break, just like the topic says. And then this is quite a very easy strategy. Some other people are, I think I've seen a few other forex traders try to make this seem complicated and all that, but I think there's actually a good part to it, and it's accuracy and all that. So we're talking about the range break 100, and take note, this other strategy, this strategy can actually work on the range break 200 index also. So just stay with me and let's stay to the end of this video, and then you should be able to testify to that. So real quick, now as you can see here, let me just show you the parameters before any explanation. So first, the first indicator we're going to be setting here is going to be the stochastic oscillator. So let's first go in for the stochastic oscillator. Now when you click your main chart and click for the stochastic oscillator, this should be your setup. All periods and slowing should be set to 1. Now you have your colors. Obviously, I think you've been following my videos, you know that this should be the same level as that of your background. And then low, high, and simple and all that. And now take note of the levels. So having 80 and 20 for a sell and buy. That's our description, but just take note of the levels, like I said, 80 and 20. Alright, so if you're done with that, you can simply just click done. And then the next one you should be setting is your alligators. Now the alligator is going to take different different parameters to it, so do take note of all you can see on your screen, and the colors are also important. So do take note of what you can see on your screen also, like I said. And so we're having the 13, 8, 8, 5, 5, 3 exponential and median price and all that. Now there are no levels on this set for these actually, because we already have that on our stochastic, and then you're done. Now normally you're supposed to use 2 indicators, but that's where we're going to be having this third one, and I'll explain everything, like I said, the moving average. So do quickly have set your moving average to these parameters, and you can take the shot you want. So once you've done that for a moving average, I'm going to delete the moving average first before we come back to it. Alright, so this is what we are working with now, the stochastic and the alligator. Still keep the moving average parameters you had set earlier. We're going to go back to that, like I said. So I want to explain something. Just stick with me to the end of this video. Now we're having this on the 5-minute time frame. Now as a professional trader, you should be able to learn how to read the time frames and how the market is affected, or what kind of trade you go in. Now for someone that wants to trade using the 1 hour time frame, just know that you're in for a very, 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 very long flight. You're not going to be expecting a quick cash out from it real soon now. And this is a synthetic indices, so the markets are all volatile and not stable. So the 1 minute time frame requires a high capital, small let's say smaller time frame and all that, or a high capital for a bigger time frame and all that. So let's go on. We're dealing with the 5-minute time frame for now. So this is what is going to happen. Actually, sometimes most of you must have guessed this by now. Whenever, okay, let's go far back before we get back to where we are right now. Okay, cool. Let's start from here. So whenever, obviously now, you can see that the alligators are now below the 20 levels. It shows a definite buy, that there will be a spike, obviously. And now you can stay in all the way to the top, or to this point. Like as you can see, obviously it's up all the way to the top till there's a sell. But hold on, still hang on it. It doesn't apply to every single level of this indicator. Now the zoom level is a total zoom out. Now if you zoom in, you can see the candles huge and all that, but for you to work with this, you need a total zoom out where everything are now shown like form of lines, just pure lines, not just candlesticks again. So now the market is on a high trend, showing a buy, showing it's overbought and obviously going for a sell trade. But I'll come back to that, like I said. Now you obviously know that Once it's obvious it's above the 80 level, like having here, going for a sell obviously, and then it sold. It definitely sells. Same thing with here, obviously overbought, you're going for a sell, and then when it comes down, got here and then it's overbought, now it's oversold, and now you're going for a buy, and then you see it goes up. But the thing is, how do you know your exit point? How do you know it's going to buy all the way? Now let's show you an example. Now right here, look at what happened here. Now okay, obviously the market oversold, and then people went in for went overbought actually, and people went in for a sell. Now the bulls took over, or that's where the bears took over, because the bulls are for the higher trend, and then the bears are for the lower trend. So they took over, and the market keep coming down. It came down but never touched the 20 level. Now like I said, don't get greedy, be disciplined. Some other people would have probably opted out after this multiple spikes happened, but those that want to stay in for a longer time, well, it's not totally safe, but this is what happened. Now you can see the market keep dabbling, went down, a very long sell, and then a spike came up here, actually a long sell here, and then it was bought, and it keep going down. Now sometimes it can be tricky, like this part, it came in for a long sell. Now for those that met the market at this level would assume that okay, it's definitely going to buy all the way, or yeah, so you're going for a buy, and obviously you see a candle here, but it doesn't buy all the way due to the fact that it came this way and then it sold, but it never got to your 80 level that you would have expected, and probably must have put you in a loss if you had stayed in the market for a longer time. Now you see the candles kind of switch positions, but you must have had a misread from this point. Now to avoid things like this, that's where our moving average comes in. So we have to go back in that moving average you had set earlier, you go in for it, and then yeah, I'm sure you must have had the parameters by now, and then you click it. Now the moving average helps us to tell us the consistency of the market. Now at this point, now some people must have sold, enjoyed this, and then probably time to buy, and then it went up. Now as it goes up, you might want to opt out of the market because it has gotten to your level, crossed over your sell point and all that, and obviously there. But you can see that yeah, it's maintained that level sell point, and then it came down, and then it bought again, and then it sold actually. Now your moving average tells you that yes, the sold is a confirmed sell, so it's going to definitely sell through the way. You can see this happening. Now what you need to understand is, after the market sold at this point, and now it's approaching a buy level, you don't go in for a sell totally until it has actually maintained its level and then comes down, give a red candle, like one red candle at least. It's an indication, and with that one red candle, your moving average must have curved to that direction. So your moving average must have taken let's say a red direction, must have pointed downwards with that red candle. Obviously, I don't know if you get what I'm talking about actually, but if you can understand this, obviously, totally, I'm sure you will scalp this market immensely all the way. Now you can do this on the 5 minutes and the 15 minutes. Those are the two actual time frames to monitor this market and gain massively. Now you can also do this with the moving with the range break 200 for those that trade the range break 200, because like the number in it sounds, it's not much volatile, but like I said, don't get greedy, be disciplined, and stick to your plan. Once you have an entry plan, like we obviously said, one good thing about trading is having an entry plan. Now there's an entry plan here that okay, I want to go in for a sell, but you should actually have an exit plan. Now you can say I want to go in for a sell and make a certain amount of money. Once I hit that amount, it doesn't matter what the market is doing, I opt out until I find my perfect sell. Now that's trading safe and trading with all form of lack of greed. Now do not trade emotional, because you missed market or met the market halfway and opted in. Now once you opt in and the market goes against you, and probably because you're losing money, you decide to do what they call revenge trade and go into the market now, because at this point it's oversold, or probably you didn't read them correctly, and then it goes against you again. So this kind of thing tend to happen. But like I said, follow the rules in this video, and yeah, you should be fine, totally 100%. Now your moving average is important. Now like you can see in this video, the moving average is important, your stochastic oscillator, and then your alligators in it. Now make sure, for you to trade safe, make sure they've crossed. Now let's go back. This is a confirmed cross. Actually, this is a confirmed cross. If you were in this market, this is how the market will look. Now please take note, this is the only part you have to observe. Forget about this section. It's only the first section you have to observe. Now you can see that every other thing changes. They can get to this point, and decide to spike up, but that's not what you're also looking at. You're looking at the forward, at where the market is coming from, where the market is heading to, rather the future part of the market, and then you can see your confirmed sell and confirmed buy, and then a moving average will keep us on track. And like the range break alligator is a very nice place, just other than the volatility 75, very a bit stable market where you can trade and make huge profits from it, obviously. So that's basically all in this video. Bye for now. Don't forget to subscribe, obviously. Leave a like, leave a comment, and then turn on the notification bell. For those of you that want to contact me, I'll show you how to contact me earlier at the beginning of this video. So do reach out. I'm going to be answering all questions needed and all that. So bye for now, and see you on the next video. Peace out.